Slice the Podcast is brought to you by Vega Lend, a different way to get a mortgage. Vega Lend provides insight and advice so you can make informed decisions for the future of your family. Welcome to Slice, Property Made Possible. We're a platform on a mission to reduce barriers to home ownership. This podcast is a safe space for our community to learn together and build the confidence required to start on their property journey. When you're ready to start, head along to slicetobuy.com and sign up for your free dashboard.
Welcome, Jiji.
Thank you.
It's a pleasure to have you on.
It's great to be here.
Jiji, you're a broker at Vega Lend.
Yes.
Do you want to tell us a little bit about yourself and who you are, what you do?
Yeah, so I am a financial advisor at Vega. So I specialise in mortgages and insurance. And I've been an advisor for almost 10 years. I feel really old when I say it. So I work with people of from all sorts, from first home buyers to people who are buying their next home, people who want to buy investment properties or build a property investment property portfolio, to people who are just wanting to refinance or look at restructuring their mortgage to pay it off faster. Yeah,
nice. Would you want to tell us a little bit more about your own sort of personal experience with property as well?
Yeah, so I bought my first house when I was 22. I think I'd saved about $20,000, and that's when houses
22.
were like... Yeah.
That's young.
That was a long time ago.
That's the ideal outcome.
That is.
Basically, the sooner you can get it.
But in saying that, I think the price of the house was about $200,000. So, it was back in those days when the debt to income ratio wasn't so high.
Right.
The debt to what?
Yeah.
No, I'm just going to do that and call you up and make you kind of try and demystify some of these concepts. We do it to ourselves as well, but...
Do I need to do that now?
Yeah.
Oh God, I shouldn't have done it.
No, you're going to change what you decide to talk about. I can help if you want. But I guess it's just like how much your earning is in comparison to the price of everything, like the property and everything.
Yeah. So when I always make jokes when older people say, oh, when I was young I had a mortgage and the interest rate was like 18% or 20%. It's like, yeah, that's really terrible, but the earnings, so what your income was relative to the level of debt that you would have needed to get to a house was nowhere near as high as it is now. Yeah, so even though the interest rates are lower, it's still a big gap. So
well, the average house price, in Auckland has been up to 1.5 or I think it's falling now, but if you just at a basic level consider that's a lot to come up with.
Yeah, it is, and it's way more than the average income. Yeah, for a couple, let alone a single an individual. Yeah. So so I bought that. It was it was a real dunger. It wasn't anything nice. So I did it up and sold it, and then I kept doing that and met partners on the way, and bought houses and kept making my way up. Had a rental property at one point, but similar to you guys, I've had a love of property actually since a young age, and grateful to have been been able to get into home ownership.
What do you think kind of created that love for property?
I don't know. I guess just I started reading books, Robert Kiyosaki, and those books after uni, and I just felt like it was something I wanted to get into. But then at the same time, I was saving so hard to buy my first house that I didn't go on OE. So I feel like I took
compromise.
that, totally as a compromise. And part of me wishes that I had, gone and taken that opportunity at that time. But that was
just... If you bought with, family or friends and shared the costs, you maybe could have gone overseas.
Well, could have had both. Could have had best of both worlds. So,
if
only I'd known you. Damn it.
Awesome.
And in terms of, I guess my experience going with the broker, I went with the bank, but that's because I was working at the bank. Yeah. DJ, I believe you went to a broker.
I did.
Kind of, what was your consideration around that?
Yeah, like I said, when I was looking, I did have a friend who was already quite successful in property investing, and he introduced me to this sort of more be a private broker. very small timer, and just had a really candid chat with me about, here's like the forms you need to fill out, all the outgoings and incomings, and but that was quite overwhelming for me to look at, I'll admit. He was giving me some degree of guidance, but I still was kind of looking at it and I was like, I don't even know what some of these outgoings mean. I didn't even know that was an outgoing. So maybe you can tell us a little bit about, what are the benefits of going in with a broker or leveraging a broker and what that can look like for someone?
Just first to say, Amy, I do have clients that work for banks and they still use brokers, so...
Oh, there it is.
So I
Coulda,
guess...
woulda, shoulda.
I guess that, that comes down to... So I always look at it as, when you're buying a house, you use a real estate professional who are professionals and, they know their stuff around buying and selling houses. You'll use a lawyer who will advise you on all the legalities around buying and selling. If you need any advice on accounting or structures, you go to an accountant. So you're using professionals right through the process. So why wouldn't you use someone who's a professional in finance? And basically, it's our job. We know, the ins and outs that we do it every day. So I feel like there's, to use a broker.
Just to caveat that as well, we do have all those partners on our platform. So I have built that out and you guys are obviously one of those partners. So I am encouraging that broker channel, but it's just, it's not what I ended up doing myself. But I definitely know some of the benefits and keen to share that with the audience as well.
So, so we, like I say, we work with all the banks. If you go straight to your bank, you only kind of get their perspective or their take on what you could potentially borrow. Whereas we work with all the banks, we understand the banks, all their criteria, and we really, we sit down with you and work out what do you need, what is it that you wanted to achieve, and kind of fit you with the best solution.
Which is really comforting. I don't know, I like that part of working with a broker. I feel like you're kind of like really, getting to the core of where you're at.
And you also don't have to pay, most of the time you don't have to pay a broker until that transaction is complete, so you can get that free advice as well.
Correct. So we are paid by the banks, and so generally our service doesn't cost a cent. So it's really a no-brainer for me, but the other job is for us is to make sure that we get our clients the best deal, and we have access to be able to do that.
And also, I guess there's the element where, yes, you support with the finances, but there's kind of some other factors that people might not be aware of, i.e. like how to structure the loan, whether or not you have it, on half of it on one interest rate and half of it on another. Like you can help with all of those kind of different details you can kind of support with.
And I think when you go to a bank direct, we spend time getting to know you. When I first sit down with a client, like you say, we really drill into, okay, where are you now? Where is it that you want to go? What are your, your big financial goals? When do you plan to retire? How do you plan to do that? So we become quite intimate with, understanding what you guys, what you're all about, and
you're pretty much naked at that point. I like to call it. You're very vulnerable.
Wait till we get to the insurance, and then I really know everything about it.
There's no hiding here.
I know so much. It's and so that enables us to best make recommendations on how we think you should structure your loan, and the banks, I guess they don't, that's not their job. They're there to provide you with a loan and their products, whereas we're there to really advise you on what's the best solution for you individually.
And your circumstances.
It's a lot more of a tailored approach.
In terms of kind of, because I've dived into that sort of loan structures piece a little bit, what are kind of some of the different structures that you might see?
So without getting too technical, most people will look to fix their loan. So basically that's just where you, so you can either fix your loan or float your loan, have a fixed rate or a floating rate. And I always recommend people look to break their loan into several portions and fix individual portions at different terms. And the reason you do that is to minimise the impact of a massive hike in repayment when your loan rolls off the fixed rate particularly in a rising interest rate environment.
i.e. now.
Yes. So unfortunately,
Oh God, I need to review my.
I have just to share a little something with everyone. I have half of mine coming off in the next year,
Fun.
so I have budgeted for that. But yeah, I guess in what you're talking about there is I had split that loan in two parts though. So one of them is fixed for a longer period, and only half's coming off next year.
Yeah. So imagine if that was your whole loan.
Yeah.
And I mean, people have got fixed rates in the 2 and 3%, and they'll be coming off in, a 6 to potentially 7%. And if their entire loan is exposed at that higher rate, it's going to really hurt.
Yeah.
So there will be potentially some pain next year for a lot of
That
people.
is where one thing we spoke about on a previous episode as well, though, where if you have gone in with others, it can be easier to manage that because you're kind of both getting, you're managing a portion of the repayments. But still, definitely need to take into account your risk appetite, I guess, and how much risk you're willing to take on.
Yeah, absolutely. And I mean, people ask me how long should I fix for. I'm not.
Crystal ball.
No, I don't have a crystal ball. I wish I did, but
you had a whole lot of clients at the beginning of this, and then I feel like they've just dropped off.
Sorry.
Suddenly vanished.
It's it always has to come down to your individual situation, and like you said, it's your appetite for risk, and if we want to make sure that you can sleep at night and have that certainty that if interest rates do rise in the next year or two, that and perhaps one of the partners is having a baby and not going to work, that we're looking longer term. So it's we kind of it should be looked at more on an individual basis and depending on the
I mean, at the end of the day, it all comes down to whether or not you can continue to afford to repay the loan, right? And if you can continue to do that over the long term, you should see the benefits of that investment. The challenge is only ever really when you can no longer afford that, and then what do you do? So kind of protecting yourself by establishing the loan or setting up that structure in the right way is almost as important as what that interest rate even is.
Oh yeah, 100%. Yeah. And on that, so there's the fixed loan, and another popular structure is a revolving credit or an offset loan. Different banks have different products, but essentially you're making your money, so your income and your savings work for you, and minimising your interest costs. And depending on how you set it up, you can actually end up paying your loan off faster, which over a 25, 30-year term will save you thousands, tens of thousands, if not hundreds of thousands of dollars in interest. So it's
let's chat, Gigi. I'm sweating
Sign
a
me
bit.
up.
I'm sweating a little bit. I'm not gonna lie.
Okay. Did you fix for 6 months?
My fix is good. It's 3 years.
Okay.
It's safe. But
Yours came off not that long ago either though, but probably just before it kind of really started climbing.
Just a pretty nice rate before it just went a little bit gangbusters. But still, I'm thinking.
Still just thinking about that 30-year term.
Yeah, I'm thinking about how much I could save and that I'm probably not at this point.
And what I've found is, we understand each bank has different products, and if you go to your own bank, they will obviously they'll sell their product, but it may not be the best product or the best one for you. So we have all these options, and like I say, we do it day in, day out. We understand how they work, and I can very quickly tell whether what's going to work best for
your circumstance. Yeah.
Awesome.
I think jumping back into that revolving credit, because I think we got a high level understanding of you can reduce your repayments and your interest over the long term, but can we break that down a little bit more? Is it sort of about kind of putting your income into an account and then having that reduce kind of the costs that you have to pay based on the balance that you're holding there? Can you kind of crack into that a bit more?
So essentially revolving credit, I look at it like it's a bucket. So we take a portion of your lending and create this bucket, which is the revolving credit facility. And the goal is that
Is the bucket red or no?
Yeah, I was actually thinking of a red bucket. It's always a red bucket. So this red bucket is it's a part of your loan, and the goal is to fill the bucket up with as much money for be it your savings or your income on a fortnightly, monthly basis so you want the bucket to fill up as fast as possible and be full for as long as possible.
Yeah.
And while the money's in there, it's reducing your loan balance. So you're only paying interest on the actual balance that you owe. So if the bucket's this big and it's half full, you're only paying interest on the top half.
We love that. We love that.
Yeah. So the balance in your bucket will be going up and down every day as your income comes in. You spend, but I like to see it as like a savings goal. So, and actually what happens is when you have like a bit of a target, you become more, you're encouraged and incentivized to keep, I'm almost there, my bucket's almost full. Yeah. So it becomes quite a good savings tool.
Not only for kind of reducing it in the short term, but kind of it changes your mindset around repaying that loan.
Yeah. Totally. So the goal is once you've filled up your bucket, if those funds could be used to pay for like a car or one of those bigger, because we don't want you to go and buy a car on a personal loan or... No. So the goal is to be thinking ahead about what are those milestones, those financial goals that you want to achieve. Okay, now we need to work towards those savings, and then you either can go and pay with them in cash, or you can tip out your bucket, pay off a lump sum of one of your fixed loans, and then start filling the bucket up again.
Right.
So it's just a constant, and this is one of the benefits of a broker is that we review your loan every year. So we're always kind of sitting down with you. Looking at, okay, where are you now? What are your goals? What's your next goal? What's your next goal? And making sure that we're actually helping you move towards those goals.
Yeah, so you're actually helping with that financial strategy in a broader sense.
Yeah.
Awesome. I wanted to take a little jump back because I feel like we kind of jumped forward in terms of structuring the loan. That's all really interesting and useful.
Yeah, I got really excited. Sorry, that's my fault.
I took some lessons from this that I didn't know before, so thank you.
But I'll give you my card.
We will chat. You'll get a call tomorrow. But just jumping back to that, something we've talked about quite a bit. It's come up in previous episodes. Pre-approval.
We haven't unpacked this, but we just keep talking about it. We've saved it for you.
It's a buzz term. But if you could maybe, Gigi, tell us a little bit what that means and how that process works exactly.
Yeah. So a pre-approval is probably one of the very first steps that you need to take when you are looking to buy a house. So it's essentially the bank providing you with a piece of paper to say, in principle, we agree to lend you X amount. And that amount is based on your income and your expenses and your liabilities and how much deposit you have. And so what they do, they assess you, and that's, as an advisor, our job is to help facilitate that application process to present you in the best light to the bank. And so they look at your income, they'll look at your job stability, how long you've been in the role, your deposit, where it's come from, how good a saver are you. They look at your credit history, all sorts of things, your account conduct. Make sure that you don't have too many unarranged overdrafts and that type of thing. So
going for brunch every Saturday.
The smashed
red flag.
That used to be the case, but they actually changed. They relaxed the rules.
That was
in July.
Earlier this year.
It's made lending a lot easier. But so now the banks don't need to necessarily go line by line through your last 3 months' bank statements. They will look for account conduct, so to make sure that you're actually paying your bills on time. But now when you put an application together, you can specify the expenses that you can declare are based on what you intend your expenditure to be.
I think that's fair as well, because there's different types of spenders. We've kind of touched on this, but Gina was quite an avid saver from an early age. I'm more of an increase my income, and then and then therefore I can spend more.
Yeah.
So I feel, for some people it can be like, for me, I was like, I'm earning, a good salary. I need to kind of move my money into an investment, and so it's not that I can't afford that. It's just that. For me, the way I even organise my bank balances is I move money out of my spending account into other accounts, so that out of sight, out of mind. So like, you can afford, when you've got those mortgage payments and they're being deducted, you can afford it. It's just that, if you're not paying it, then maybe you do go out for brunch and, wines on Waiheke every once in a while. There's a period often of your life before you buy the house where you might have a bit more disposable income, and you enjoy that time, and that's,
totally.
that's fine.
Why, if you don't have a $5,000 monthly mortgage, payment to make, then
Buy
why
that-
shouldn't you
Buy that pair of shoes. No,
Yeah,
so controversial.
Good for me to hear. Like, oh.
No, it's about
Shopping
balance though, and I think and just like being fair with saying, hey, you can't tell someone that they can't do better or like start investing.
Mm-hmm.
You're almost it's like a barrier to helping people move into investment if you just say, oh well, you spent all that, but you spent it on things that you don't need, which clearly you can go without. That the mortgage repayments will still be met. So I think it's really good that they relaxed that.
Yeah. Oh yeah, made a big difference. Made our job a lot easier. That's for
Yeah.
sure. Yeah.
Also, that just your line item. Then you're moving into accountant
Yeah.
territory.
You went to KFC on Saturday the 30th.
Yeah.
Why?
I mean, when I was going through it, it was like, yeah, well, you had like a credit card, for example, which is a different scenario, but like things like that just all adds up. You just wouldn't think it would impact your ability to borrow so drastically.
Yeah,
like
it
the
does.
ratio.
Yeah.
You know? Yeah.
And something I've really seen explode recently is the use of the buy now, pay later scheme. So, your afterpays
God.
and
Yeah, it's a trap.
they also,
Useful trap
it's
sometimes.
terrible. Yeah.
But,
But I mean, all those little things. So, any student loans, personal loans, credit cards, they all impact your borrowing capacity. So, and when it comes to pre-approvals, I always recommend people to come and have a chat with, an advisor in advance of them buying a home, even if they're not quite ready or there yet on the deposit. Sit down, have a chat, figure out what you actually need to do, get yourself approval ready, even if it's just cleaning up your accounts for 3 months. Especially if you've got kind of a small deposit, so you're considered a bit higher risk from the bank's perspective. You can do yourself wonders just, rearranging a few things, sorting out your accounts and how the flow of money works.
So that's actually kind of how we've positioned it on the Slice platform. We sort of say step one is kind of understand what that buying journey is, because it's so overwhelming that you kind of want to actually just be like, okay, so there's 6 steps, that's what we've pegged it back to. But just getting that familiarity, and then it's looking at your ingoings and outgoings and those finances. So if they can engage with you, if they need that support to kind of move into that, then that's one of the best places to start.
Recommend.
And also then, because of the pre-approval process, like that application actually goes through, and credit assessors do come into play. Being able to actually have an understanding before you kind of go through the formalities is super helpful.
Oh yeah, in a big way. And like I said, we understand. Not all banks are created equal. They do look at things differently. So we understand all different kind of little bits and pieces that the banks maybe one bank cares about, the other doesn't. So we can kind of find a lender that best suits each individual.
Yeah.
Awesome. Fantastic.
Awesome.
Thanks again, Gigi.
No, thanks guys. That was fun.
Thank you for joining our community. Buying property isn't easy, but listening in will get you one step closer on your journey. Please leave an Apple or Spotify review and provide feedback so we can improve your experience. Join our Facebook group, A Safe Space to Learn Together, or follow us on Instagram at Slice2Buy. If you have any questions or topics you would like us to touch on, you can email us at hello@slice2buy.com. A quick reminder, Slice the podcast does not provide personalised investment advice. We are not acting as financial advisors or taking into account your circumstances. To get personalised advice, join us at slice2buy.com and engage with our partners who can act as your financial advisor or lawyer and support you with your specific needs.